SoundHound AI, ticker symbol SOUN, is currently trading at $19.14, up a staggering $1.78, which is a gain of 10.25% on the day. Now, seeing a double-digit pop like that on your screen might immediately make you think the story is simple: a high-flying AI stock doing what high-flying AI stocks do. But the real story here isn't just the percentage gain, it's the sheer force and volume behind it, which points to a fundamental shift in how the market perceives this company, moving it from a speculative bet to a strategically validated player in a very specific corner of the artificial intelligence world. The widespread expectation, the narrative you'll hear in most places, is that this entire explosive move over the last several weeks is purely because Nvidia filed a 13F form revealing a stake in the company. That's the headline, and it's a powerful one. When the king of AI, Nvidia, invests in a smaller company, the market takes notice. The assumption is that this is a simple stamp of approval, a signal that SoundHound has the right stuff. This has caused a wave of buying activity across every platform, from seasoned investors using the robust Fidelity trading platform or interactive brokers trading tools to new participants piling in through the Robinhood app. The expectation is that where the Nvidia stock goes, so too will its smaller partners. But the reality is far more intricate and frankly more compelling than just a simple endorsement. That Nvidia investment, while significant, is a piece of a much larger puzzle. The real story is about the validation of SoundHound's specific technological niche, voice AI that is independent of the big tech ecosystems. While companies are building massive, generalized large language models, SoundHound has been laser-focused on creating efficient, powerful voice recognition and natural language understanding for specific applications, most notably in automotive and customer service centers. Nvidia's investment isn't just a financial bet, it's a strategic signal that there is immense value in specialized AI solutions that can run on the edge, meaning on the device itself rather than in the cloud. This is a critical distinction. For a car manufacturer, having a voice assistant that works instantly, even without a perfect internet connection, is a massive competitive advantage. This is what SoundHound offers, and Nvidia, the company building the hardware for this future, is clearly taking note. This isn't just about another AI play, it's about the architecture of the entire connected device landscape. Looking at the recent market action is like watching a coiled spring release. Today's 10% surge is happening on top of a multi-100% run-up over the past month. The trading volume has been astronomical, frequently exceeding 100 million shares in a single session, which is multiples of its average volume. This isn't quiet accumulation by a few big funds. This is a full-blown market event. The price action has been characterized by extreme volatility, with wide intraday swings that can shake out the most disciplined traders. This is a stock that requires active monitoring, whether you're using SoFi Invest to check your positions or setting alerts on a more advanced platform. The sheer velocity of this move suggests a significant retail investor presence, but the institutional footprint is what provides the foundation. The Nvidia filing brought the spotlight, and now other institutions are being forced to analyze the company, leading to this immense liquidity and interest. This is the kind of momentum that can create a feedback loop, where rising prices attract more buyers, pushing prices even higher. However, it's also the kind of setup that can lead to sharp, painful pullbacks. The key is understanding the difference between hype-driven momentum and a genuine reassessment of the company's long-term value. For those managing their portfolios through services like Schwab Intelligent Portfolios, a position in a stock this volatile would likely be very small and carefully balanced. So what does SoundHound AI actually do? At its core, it's a voice artificial intelligence company. They have spent nearly 2 decades building a platform called Houndify, which allows other businesses to integrate a custom voice assistant into their products. Think about the voice assistant in a new Mercedes or a Hyundai. There's a good chance that's powered by SoundHound. They also serve the restaurant industry with voice AI for taking orders over the phone or at a drive-thru. Their business model is primarily based on royalties and usage fees. For every car that ships with their technology, or for every query their system processes, they get a small piece of revenue. This is a classic razor and blades model. The initial integration is the hard part, but once they are embedded in a customer's product line, it creates a sticky, long-term revenue stream. Their most recent earnings reports have shown impressive revenue growth, often exceeding analyst expectations. The problem, and the major risk, has always been profitability. The company has historically burned through cash as it invested heavily in research and development to compete with the likes of Amazon's Alexa, Google Assistant, and Apple's Siri. This is the central tension for anyone considering an investment in SOUN. You have top-line growth that is accelerating, but a bottom line that is still deep in the red. This brings us to the future outlook, where the expectation versus reality framework becomes absolutely critical. The market's current expectation, fueled by the parabolic stock chart, is that SoundHound is on a direct path to dominance in its niche, and that profitability is just around the corner. The enthusiastic buying on platforms like the Fidelity mobile app and SoFi active investing reflect a belief that the company has crossed a crucial threshold. The Nvidia connection is seen as a near guarantee of future collaborations and success. The reality, however, requires a more sober assessment of the risks and opportunities. The biggest opportunity is undeniable: the automotive sector. Cars are becoming computers on wheels, and a seamless, powerful voice interface is becoming a standard feature, not a luxury. SoundHound has established major partnerships with companies like Stellantis and Kia. If they can continue to land these large-scale automotive contracts, their revenue growth could continue to be explosive. The potential expansion into other areas like smart devices and IoT is also significant. The validation from Nvidia could open doors to new customers who were previously hesitant. On the other hand, the risks are just as substantial. First, there's competition. You're not just competing with other small companies, you're competing with Apple stock and its massive cash hoard, and the deep AI divisions at Google and Amazon. These tech giants have the resources to subsidize their voice assistants to gain market share, a luxury SoundHound does not have. Second, there's the profitability issue. The company will eventually have to prove that its business model can generate actual profit, not just revenue. Failure to do so could cause investor sentiment to sour very quickly. Finally, there's the valuation risk. After such a massive run-up, the stock is priced for a great deal of future success. Any execution missteps or signs of slowing growth could lead to a severe correction. Investors doing their own self-investing need to be acutely aware that the easy gains may be in the past, and the path forward will require the company to deliver on these heightened expectations. For anyone holding this stock in an individual brokerage account, whether it's with a full-service provider like Fidelity Wealth Management or a self-directed one like Interactive Brokers, the question is what to do now. Do you take profits, or do you hold on for a potential buyout or further growth? This is where an honest look at the company's moat is necessary. What is their unique advantage? Comment below what you think SoundHound's biggest competitive advantage is against the tech giants. Is it their technology's efficiency, their independence, or their focus on specific industries? This is a crucial question for the long-term thesis. In conclusion, the story of SoundHound AI is a classic example of market perception catching up to, and perhaps overshooting, technological reality. The expectation was that this was just another small speculative tech company burning cash. The reality, catalyzed by a strategic investment from a market leader, is that it's a company with established technology and a significant foothold in the massive automotive market. The recent stock performance is a reflection of this dramatic reevaluation. However, the move has been so sharp and so fast that the new expectation is one of near flawless execution and rapid growth. The ultimate reality of this investment will depend on SoundHound's ability to convert its technological edge into sustainable, profitable growth while fending off some of the largest and most powerful corporations in the world. The narrative has shifted, but the fundamental business challenges remain. The difference now is that the entire world is watching. Disclaimer: this video is for educational and informational purposes only. It is not financial or investment advice. Always do your own research and consult a qualified financial advisor before making any investment decisions. Thanks, and don't forget to like, comment, share, and subscribe for more stock market updates.